by becoming rich.
Take all your money, buy Bitcoin.
I say when we sell.
Wake up every morning and say GM.
GM. Today is August 10th, Saturday daily levels. Let's fucking go. So, in terms of the price, fairly quiet, as we head into the weekend. And I mentioned yesterday on, what was it? In the trading analysis chat, yeah. So we closed above the Thursday New York session value area. Closed above there, retested it on Friday, wasn't able to break, held. This is very good. This is very bullish. The reason why, obviously, it's not like it's mooning, but what you want to see is volatility dry up, disappear, and you also wanted to see Friday close off the lows. So Friday, going into New York session, tried to dump again, and again, and kept getting absorbed. And we ended up closing the session over here, a little bit higher, and that's pretty nice. That's a pretty decent start to the day, start to the weekend, I should say, going into the weekend, because what it could have been was easily breaking down towards 58. Now, this will probably go there at some point. It might just be building stops and we get a sweep and a flush. It's not like this is just all systems go for moon. I am still on my swing long that I mentioned. No changes there. But you have to think about the attempt. So there was multiple separate attempts to break it lower and it wasn't able to. It's not like this is just drifted. So it drifted lower during the morning of yesterday. And I think that's why where Bitcoin's going is first target's going to be this daily open here. Because on Friday, daily open, moved down, retested it, and straight down. So we had a red day with no upper wick, pretty much. No attempt to go higher. So basically anyone shorting off the daily open on Friday has had a free ride all the way down. And it's probably going to go back up there and hunt that level. But, that's just a sort of low time frame and shorter term move. We might see that over the weekend. I thought that we would see that last night. We got the push. We took out these highs, come back inside. I think price will build up to there. On a higher time frame for this next development of accumulation, which I think it will be reaccumulation. So we had strong volume into the close. Let's just look at volume here. We had strong volume into the close on Thursday. Really nice push. Friday opened and we just drifted. Drifted lower, low volume, little pickup, but still low, below average until New York session. So when you have these bleeding, drifting downwards moves, you want to stay out of the way of it. You don't want to try and long it because it just keeps drifting. And you don't want to try and short it because, of course, it's low volume and it can easily get squeezed up. So what we saw was going into this value area and into the point of control of Thursday's New York session. New York session closed at the highs with high volume at the highs. That's a good sign. And then volume really picked up on the open and for the next couple hours, multiple repeated attempts with high volume to break lower and they failed, which is good. So we saw some volume come in. We saw volume come in on this retest here. We've seen high volume attempts, at least relatively high volume attempts to break. So confident that that's a good sign for BTC. And you can see where this consolidation is taking place. On the 4-hour trend, we have moved up and consolidating back above the breakdown levels. So if we're looking at Monday's open, which was over here, right? That was the weekly open there. Weekly open was 58.1. So think about that. Think about all the craziness. Think of how bearish everything sounded and felt on Monday. And yet we're going to close the week higher. I don't think we're going to have a strong sell-off this weekend. I certainly don't think it's going to go below 58.1. We might sell off a little bit, but I think 58 will hold. I think we are going to close with a green reversal candle. Now, of course, this is widening mouth, higher volatility, consolidation up here. Like, this is not what you want to see for continuation. For continuation, you actually want to see the complete opposite. You want to see volatility decrease. But we're just talking about how bad it was on Monday versus today. That's a good recovery. That's as good a recovery as you can ask for. So I still think what I thought yesterday, where we continue and we try 63, 64, 65, 66. We try up into that area, and I think that's where we meet real resistance. That's where you have a proper pullback, and that's where you get your retest, higher low, whatever you want to call it. For now, on the low time frame trend, we've held the 1 hour. These are good for a new high. So many of you guys have done this exact testing, or at least a few of you have. I know I've talked to you. When you see price, here's a perfect example. Price in a trend, right? Bands are green. So obviously you want to be long as the bands are green on the 1 hour, if you're trading the 1 hour. It drops below the bands, which makes some people sell, gets some people stopped out, makes some people panic, and then it holds them, so the bands never cross red. When you see that recovery back above the bands, very often it goes for a new high, and it does. Boom, new high. Went below the bands here, went to a new high. Then we had our first proper little sell-off into a trap, but since reclaiming the bands, this has been the first attempt to lose them, and they got defended all the way. And so it's important from that perspective, just for like an immediate move, it'd be important that we stay in this strong 1 hour trend, and that'll let us push towards the highs. But on a zoomed out perspective, it doesn't really matter. This is like if you're following a low time frame trend versus higher time frame. So the higher time frame is obviously what matters. And what you're looking at most of all for BTC is back to this 4 hour trend, right? So the 4 hour trend was bullish, it flipped bearish. We're now fully bearish, 50 below the 100, below the 200. So Bitcoin still has plenty of work to do to reclaim a 4 hour trend that you would swing trade off of. And I still don't think that this move is like building up for new all-time highs or anything yet. I actually think that'll take longer than people want it to. Because the best case, like obviously worst case scenario is we can put in another lower high and go to new lows. That's not impossible, right? Or come all the way back down and fill in all of this and really fall into this previous inefficiencies, try to fill them. That is not impossible. It's like what the market is doing. When you take off the wicks, right? This is a clean downtrend. Lows and lower highs and lower lows, lower highs and lower lows. It keeps bouncing up fully each time. So what do each of these bounces tell you? If you remember the last couple of weeks, I talked about how these bounces weren't super bearish, because you have a high and a low. You have a lower high, but it comes almost all the way back up. Then you make a new low, but then you come all the way back up. Then you make a new low, but you come sort of 80% of the way back up. So you're noticing now the first signs, and this is where breaking 68 is so important. You're seeing the first signs of weakness. And now I say, you're like, what? It looks really weak. No, but in terms of the bounces, it was bouncing, retracing almost all of the move. And if I get I'm just going to use the candle closes for this, just to visualize it and show you what I mean. You're getting full retraces of these moves. So here, it bounces up to, I'm going to have to add on 80%. Where we do that here? 0.8. Put on a 90% as well, 0.9. So look at this one. You drop off the highs, you bounce up to about 80% to 90%, sorry. Basically 90% retracement, right? Then you have the next one, then we move down. Remember, if you're in a strong trend, so you move from this high down to that low, and you bounce up almost 100%, almost all the way back up. Yeah. Then you have a retracement of that one, which takes you down from this high to this low. And this time you get an 80% bounce, right? So you went from a 90%, 100%, so holding up nicely, to an 80%. Watching this one, where does this retracement come to? Because that's going to tell you whether supply or demand is more dominant. Who's doing the more aggressive pushing here? If the bounce comes to the 618 and rejects, that could well be a new trend leg lower. If it comes to 75, 80, 90, especially if it comes back to 68, which to me is the shift, the first sign that you want to see, that will be a full retrace of previous leg. And that would be the first sign that the market is shifting. So if we did go all the way up here, right, then you'd be saying, okay, well, at that point, we've actually stopped with these downtrends. We've actually fully retraced them and gone slightly higher. So that's your first early signal before we get to 74. If we get to 68, 69, 70, that'll be a pretty good sign that we're not going to go all the way down. Again, nothing's impossible. It depends how it gets there. But you can see that, you can visualize and say, okay, what's actually happening here? Now we take it off and we show the wicks. What's actually happening? This is where spot sellers come in. Spot sellers are selling, drops off, people get liquidated, stopped out, and then buyers step in. Push up again into a wall of spot sellers. Then it comes down. Leverage liquidations allow the bounce. So you're taking out the leverage players, which allows it to bounce. The bounce can then carry and squeeze the shorts up towards the high, but then the spot sellers step in again. Then we drift down. We leverage liquidate people again below the lows. Leverage gets wrecked as all the people pile into longs and they buy the dip. Again, that's enough. That creates enough of a vacuum for price to rise up into spot sellers. When the spot sellers are stepping lower, that's a bad sign. So it's really clear. You need to see a change in character of this move, which is stop the spot sellers from stepping in lower and lower and lower. Because otherwise that just means they're just exiting. There's no other way of looking at it. Because the spot sellers are absolutely in control there. There's no, this isn't like a fucking psyop or, oh no, it's a bear trap. It's not a bear trap. It's just spot sellers are stepping in sooner and sooner and sooner. So once that shifts, that's your big sign. And, these drops are really just taken out, trying along the bottom, trying along the bottom, trying along the bottom. People trying to catch every bottom in a bull market. So that in and of itself is not a bad thing, because it's showing it could well be, once we're up here, you look back and you say, oh yeah, it was just the market shaking out people who are trying to catch every bottom. But there's a lot of work to do before that would become a reality. So market has work to do. Overall, I think it's in a good position for now. Risks are definitely still there. Stock market risk, obviously, if it goes for another leg lower. Be interesting to see what happens with crypto. I do think Bitcoin will retrace back down into some of this gap because it was a pretty low volume move. All else being equal, there's plenty of room here for pullbacks. But I think we go higher first, then pull back. I've talked about this before. Now, what about the rest of the market? Look at the other majors. Look at ETH and Sol. So ETH, is now back inside of this part. So before this breakout, because we've fallen back inside, we'll look at ETH from the lows, at least from the lowest point before this uptrend rally began, until it had that break higher. We'll go just before that candle, and here's ETH now in this value area. So this was the last previous consolidation for ETH, which was a bullish one, right? Everything that happened in here was obviously bullish because ETH went higher. Falling back inside of it, what you want to see is this where people are going to reaccumulate? This is obviously distribution. Obviously spot we're selling, spot we're selling, spot we're selling, spot we're selling, and they sold the ETF launch hard. This is all distribution. When you have distribution above, the only question you want to ask yourself is where do they buy again, right? Big players sold 4K. They sold 39, they sold 35. Now, they would have sold, spot sellers were selling there. Spot sellers were not selling so much here and here. There was obviously spot selling, but then it starts to leverage liquidate and takes out the stops. So what you're looking at is where do they step back in and properly accumulate? Down towards 2K, after a drop from 4 or 3.9 or 3.5, that's definitely a place you could see reaccumulation. But it will probably take time. And when you get back into these previous value areas, if it's not able to claim back above, which is trying to do, and it would have to really reclaim strong, and then you'd be looking at a retest of the old value area high. If ETH does that, it should be building back up. If not, you can see it push slightly above, but then fall back inside, and that's where you see it spend more time down here. Remember last time it was over here, it spent from November until February. Right, 3 months it spent really in here. 9th of November, December, January, February before it broke out. We're only in here for 5 or 6 days. It can spend time back in this area, absolutely, to reaccumulate or build back up or whatever. And, overall, the ETH chart is very messy. Charts can get wrecked. can get broken. And this chart, excuse me, has been broken. The momentum has completely been lost on ETH. Solana is a different story in that it hasn't lost that momentum, at least yet. And you have all of this from the top all the way to the last breakdown point, and then we come back inside. So I keep drawing this across. And Sol is just consolidating within its own value area. But the same thing applies, whether it goes down and chops sideways or anything. It really matters to Sol once it starts to break out of here and hold. Right? It tried to break out back in July. If it rises up, breaks out, back above 180, 190, that's when it's most likely heading for new highs. I'll not look through all the alts, I'll just look through total 3. And we're seeing the same pattern occurring, as you'd imagine. Right? So what has actually been happening here? Well, since the lows, this was the capitulation and the reaccumulation. And then we rally up, we base, we consolidate, we rally up, we come back, revisit that area, and now we're consolidating again. Is total 3 going into a reaccumulation here? Is it going to hold this level? Is it going to go higher? These are the questions that you have to ask. The strongest bounces that you see are in bear markets, right? This is something that usually gets misunderstood. You don't have strong bounces in a bull market. Look at it. There's not strong bounces because it's an upwards trend. Where are the strong bounces here? It's not. It's just rising, 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 accelerating, small dips, rising, 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 right? When you get your first strong bounce, where you have a 37% sell-off, what happens? You get a strong bounce from the lows to make new highs, but that's the top. The strongest bounces can be bearish signs, as this one was. It sold off. You then have a relatively weak bounce, and no bounce, and no bounce, and then it just grinds up, grinds up, grinds up, grinds up. When the bull market ends, that's when you see some of the strongest bounces. You flush leverage, you bounce 43%. You flush again, you bounce 43%, right? And obviously, once it then breaks down, what happens? The bounces disappear because that last move, that big shift of character, and when Luna collapsed and all that, that's when people stop believing there's a bull market. These bounces are so big, and this is why we had the biggest stock market bounce this week, biggest one-day bounce since November 2022. It's because people still think it's a bull market, so they keep buying. That doesn't mean it is a bear market, but it has to reclaim and hold. And so what you're seeing here is strong bounces because people still think it's a bull. But look at on the way up. There were no strong bounces. It was just up, 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 shallow bounce, up, up, up. This is just a rally. Then you have big leverage flush and you have big bounce. Right? You have, again, a 28% bounce. You drop down, you have another 30% bounce. And then we'll go into the daily and we'll look at this one. And already off the lows, you have a 23% bounce. These big bounces are coming because leverage gets flushed, positioning gets reset, but buyers still want to step in and buy because they think, well, it should still be a bull market. That needs to reconfirm. But the best way for it to reconfirm is actually for consolidation to happen. Right? It's for it just to stop going down, volatility to dry up, and then it starts to rise again. You don't want to see bounces, you just see price rising. Dips, sure, but not crashes and then bounces. A crash and then a bounce is a sign of a volatile market. Crash, bounce, crash, bounce, crash, bounce. These aren't crashes, these are dips. Right? Dip, buy the dip. Small dip, buy the dip. So, again, a lot of work for these charts to, get bullish again. I actually want to look at some stocks. Nvidia. Yeah. Again, your biggest bounces on Nvidia are coming when? On the way down. Like, what was the biggest bounce over here? It dropped down into there. It doesn't even, it's not like, when I'm talking about bounces, you're talking about like an immediate reaction. It doesn't do it. It's a dip, rallies up, has a dip, rallies up, has a dip, grinds back up. What happens? You have a bigger sell-off, you have a bigger bounce. 15% bounce. You have a bigger sell-off, and now we're in the midst of this bounce, which is, probably another 15%. Yeah. You're wanting to see that shift. I mean, I think the top's in for Nvidia. I don't see why Nvidia would continue to be the big story of this bull market. I think that's mostly priced in. But look across the others. Apple, like this, I mean, you know, Warren Buffett sold his Apple and all that kind of stuff. Apple has broken a lot of this uptrend structure and is having a really aggressive bounce, which again, I mean, this just screams to me lower high failure and back down. The best thing that could happen would be volatility to dry up and then it start to rise again. Right? You want to see volatility dry up. You want to see it stop moving, and then reignite into an uptrend again. And Meta has been a big one too. Meta is probably actually the best of all of them, where it's holding up the best structure near the highs out of any of them, really, because it didn't have a big overextension and a big drop like Nvidia. It's kind of just basing and consolidating, which is pretty good. So I'd still be cautious about stocks for sure. Many of them seem to be rich at the moment, you know, still high, overbought on higher time frames. And I think what happens going into the election is important here. So plenty of reasons to be hopeful and potentially bullish moving forward, but also I think we need to see what's going to happen in the next couple of months, especially going into the election. And what else? That's about it. So we'll see how the weekly closes. Today, weekend workshop. Be there for that. Remember, these are only on the weekends. Join me live today at 4 p.m. UTC. And the recording will be up for 24 hours. Let's go. GM.